Hello, everyone. Buenos dias, bon dia. I'm very pleased to welcome you today for this workshop on strengthening guarantees and de-risking instruments for subnational development banks in Latin America and the Caribbean. Before we start, I'd like to share with you a few technical information. We are together for 2.5 hours. An interpretation service is available in English, Spanish, and Portuguese. Please choose your channel on the screen. You can use the chat box to share your questions and comments. Please feel free to use it. We will have time for Q&A sessions with the panelists. And please also note that this meeting is being recorded and will be broadcasted in replay on internet. So let's get started. My name is Émilie Mayara. I'm the Deputy Executive Director of the Global Fund for Cities Development, FMDV, an international network of local governments dedicated to developing solutions to finance and invest in cities. I'm very pleased to welcome you today for this workshop on strengthening guarantees and de-risking instruments for subnational development banks in Latin America and the Caribbean, organized by the Alliance of SDBs in Latin America and the Caribbean, which Secretariat is managed by FMDV, and with the support of the Inter-American Development Bank. So we all know that financing the urban and territorial transition is a key challenge to achieve the implementation of the SDGs and the Paris Agreement goals. However, we are faced with a systemic failure of the subnational finance market with a disconnection between the supply and the demand side. One of the main reasons for this market failure is a too high level of risk perceived for subnational investment. Among these risks, we can mention risk related to political context and electoral cycles, the level of capacity and creditworthiness of local governments and actors, which is considered too low, or an insufficiency of local projects regarding their scale and their preparation. So today, we will exchange on how subnational development banks can bridge this financial gap in enhancing guarantees and de-risking instruments for subnational investment. So what are SDBs? Subnational development banks are public development banks or financing institutions supported by national or state government with the specific mandate to provide funding to local and regional governments and local stakeholders such as SMEs. So today, when we will mention SDBs, we will not talk only about institutions owned at the subnational level in federal states, but we will also talk about national development banks with a mandate to finance subnational investments. So as financial intermediaries, and thanks to their knowledge of local contexts and particularly of local governments, thanks to their ability to lend in local currency, as well as to support structuring pipelines of local projects, SDBs have demonstrated their critical potential in bridging the subnational financing gap by expanding sources of public and private financing and structuring sustainable local investment portfolios. This is the reason why SDBs have joined forces in the Alliance of SDBs in Latin America and the Caribbean. This multi-stakeholder alliance is a finance in common initiative, which is the global summit gathering 500 public development banks committed to finance the implementation of global agendas. This alliance gathers SDBs and their institutional and financial partners, development finance institutions, international organizations, academia, think tanks, and local government networks in order to strengthen the capacity of SDBs to broaden and improve their services offered to local governments and local actors and to consolidate portfolios of sustainable projects. The IDB, which supports the workshop today, is a member of the steering committee of the Alliance. So today, during our workshop, we will experience this multi-stakeholder dialogue and cooperation. Our objective today is to exchange between peers, between SDBs, and with technical and financial partners on existing approaches, inspiring experiences, and recommendations for enhancing guarantees and de-risking instruments to better finance subnational investments to support the just urban and territorial transition in Latin America and the Caribbean. The outcomes of the discussion will form the basis for a paper highlighting inspiring experiences and recommendations supported by IDB to be presented at the next Finance in Common Summit to take place in Abidjan in next October. So we will start with presentations from AFD and IDB, and then we will have two roundtables. The roundtable one will gather representatives from SDBs who will share their experiences, and the roundtable will gather financial and technical partners to share experiences and recommendations to SDBs for strengthening guarantees and de-risking instruments. These two roundtables will be moderated by Dr. Barbara Samuels, Executive Director of Global Clearinghouse for Development Finance and Senior Advisor to FMDV. And then we will have a wrap-up by Sergio Gusmao Sushodolski, CEO of Desenvolve SP, who has been a founding member and champion of the Alliance in his former mandate of CEO of BDMG in Minas Gerais. But now I'd like to start to give the floor to Mr. Juan Antonio Queterer, Division Chief, Connectivity, Markets and Finance at IDB, for the opening remarks. Thank you.
Well, thank you very much, Emil. Good morning to you all for being here with us. I believe that most of the audience speaks Spanish, so I'm gonna switch over to Spanish. Buenos días a todos.
Good morning, ladies and gentlemen, and thank you very much for being with us this morning, participating in this workshop that I know has generated a great deal of interest. And I think one of the things that we're here for is because today we see that subnational entities, municipal governments have the need to change their financing methodologies, especially in terms or in the face of climate change and climate-driven initiatives. So there's two key takeaways that I want to leave with you today. I don't want to extend myself too much, but first of all, the type of financing that public banks, in particular subnational banks, need to change. They need to transition from opportunistic financing to strategic financing. What I mean by this is that up until now, we've been funding projects on a one-by-one, and sometimes they're interrelated, but without a overarching strategic vision. Now we have a significant and consistent strategic vision, which really is the implementation and the path toward net zero carbon. And I think we need to make changes to the methodologies. We need to prioritize our projects in a different way. We need to transition from an opportunistic perspective to a more strategic one. And the second point, the second key change that I think we need to undertake is that we need to transition from becoming financiers to builders. And I think that's something that is vital. And if we didn't do it in the past, it's because it wasn't needed. In the past, we had sufficient resources and priorities were not as pressing as they are today in order to have the needed amounts of resources for transitioning to our net zero goals. And this is, I think, key, because the reason we didn't do this in the past was because of course, it's much more complicated to be a builder than simply financing initiatives. It's much easier. What you need to do is just borrow and target those resources to a specific objective. Today, we have entered into a much more complicated but more effective realm. Now we use public resources, both our own as well as those that can be obtained from international donors, in order to provide for a blending of various financial sources, market financing, subsidized funding, grants, and structure them in such a way that direct financing has now become a risk absorption structure that will facilitate and will attract the private sector in funding these types of projects. That's a key component, because the leveraging levels that we can obtain with $1 of blending is much greater if it were compared to applying this into direct financing. It's not an easy undertaking, very complicated, in fact, but it's essential that we be focused here together in order to examine and address the challenges, the various techniques that we can apply in making this transition. So I ask the organization to continue to take this lead, and those participants who are here, I wish you all the best, and I hope that this is just the first of many fruitful and productive exchanges. Thank you very much, and have a great day.
Thank you so much, Mr. Ketterer, for this great introduction, and thank you for all the great speakers that are here today. I'd like to start welcoming Mr. Bertrand de Dianous. He is a head of local finance and decentralization unit at the French Development Agency, AFD, and he will present the outcomes of a study commissioned by AFD on subnational development banks in Latin America and the Caribbean. Bertrand, the floor is yours. Thank you.
Thank you, Emily. I'm sorry, I'm shifting to English. My Spanish is definitively too poor. So just a few seconds to. Okay, so thank you, Emily. I am Bertrand de Dianous, head of local finance and decentralization in the urban division of AFD, the French Development Agency. So thank you for the invitation. I'm very grateful to you and all the Secretariat of the Alliance for this a good initiative, and thank you, IDB, as well. I'm very pleased to be here with you today. So some of you may know, but AFD over the past 15 years has been a pioneer in the lending activity to local authorities without sovereign guarantee. So it was valid for let's say globally, but especially in Latin America, with countries like Argentina, Colombia, or Ecuador, for instances. So why such focus? Because local governments, due to the nature of their responsibilities, are at the forefront of the SDG challenges, and as for I think all the development banks, SDGs, sorry, are definitively the milestone of the mandate of a development bank. So that's why we are very interested in knowing how we can help more local and regional government to access financing to finance their basic sustainable infrastructure, and also the public services, essential public services they provide to the population. So with the purpose in mind to foster this activity even more, and also with the purpose in mind to assess to what extent we could leverage something that is currently being put in place by the European Union, which is a grantee fund called European Fund for Sustainable Development, so EFSD plus. We decided 1 year ago to launch a study on the public sector lending market in Latin America, and this in order to get information, in order to better understand what are the different frameworks that apply to those markets in different countries in Latin America, to also assess, list, and collect all the existing practices and also all the products, the financial products that the local and regional government can benefit from. So with some quantitative information like, the maturity, the interest rate, etc. But also to list all the barriers that basically refrain or slow down the growth of financing offered to local and regional government, and as well to have a better view of what are the key players around this public sector lending market. And when it comes to players, SDB are definitively one of the best placed one to help the LRGs, local and regional government, to access financing. So that's why we decided also to dedicate part of the study to the SDB in order to have a kind of mapping of the universe of SDB in Latin America. So this study is being performed currently by a consortium of consultants. Is not finalized yet, but still we believe with the Secretariat of Alliance that it was a good opportunity today, this workshop, to share the preliminary finding of this study with you, findings that will be complemented, by the way, by the presentation that come right after by IDB, and I think both of them will pave the way for the discussion that will be held in the 2 roundtables that are coming. So, by the way, not an easy exercise for me, because I will try to speak about you to you directly. But anyway, I will try. So, a few words about the scope first. So you can see on this slide. So 19 development banks, 13 effectively met, because we basically had a fieldwork stage with local experts and consultants meeting financial institutions. So 13 of them were effectively met. Those written in red are basically the banks with whom we did not have the possibility to have a meeting, either in presential or virtual. So 3 subnational development stricto sensu, but as said by Emily, I think here the universe is clearly SDB in kind of extended comprehension of the term. So what we can say is, despite variation in legal setup, because all are not the same setups, they are not all limited company or so on and so forth. Despite difference in ownership, because some are fully state-owned, some are partially public-owned, etc. Despite the age of creation, because some of them, like in Brazil, like in Argentina, operate for more than a century, so very old institution, while others are more recent. For example, in Colombia, operate over the past 10 or 20 years, sorry, only. But a common characteristic to all these SDBs is the fact that they are not for profit, or at least not profit maximizing entities, which provide cost-efficient lending to private or public sector entities in their country or region of domicile. So in this slide, you can see that majority of those SDBs, and again, maybe I would have I should have said that before, but not the pretension to be very comprehensive. But in the scope of these entities, you can see that most of them have both mandates. So mandate to support both private and public sector. So it's something to keep in mind. Maybe we have a different breakdown between the two, so the balance is not the same, obviously, depending on the institution. The customer base in the public sector is also very diverse. For instance, we have some SDB in Brazil that cover almost all the scope of the municipalities of the territory, while Others are very exposed to a limited number of entities, like, for example, Findeter, of which 20 entities represent more or less the entire loan portfolio of this entity. We can also say that the funding structure of these entities is also very heterogeneous, with some of them that are managing federal funds, like in Brazil, with a large array of sectorial funds in education, healthcare, tourism, etc. Some of them are also even benefiting from tax proceeds. So it's a case in Costa Rica, which is something pretty rare, and some of them also act as a pass-through, the so-called repassadores, like in Brazil, with no transformation risk, no asset liability risk on this activity. But most of them, in terms of funding structure, are wholesale funded, so dependent on a source of financing, so either through bond or loans from other financial institutions. So in terms of product, SDBs can theoretically rely on all the spectrum of financial products, ranging from the grants up to the guarantee, but predominantly they operate through loans, so what you can see under the denomination of debt, and also through technical assistance, like, for instance, FDN in Colombia. Guarantee are more rare, even if it exists in some of them, through, for instance, guarantee to fideicomiso, or guarantee fund for the bankability of the local and regional government projects that are established and structured as PPPs. So it's a case, for example, in Ecuador with BDE. In terms of field of intervention, I would say no big surprise. It covers all the type of sustainable infrastructure backing the essential public services that the LRGs provide to the population, like housing, waste, water, transportation, etc. So I think they are fully aligned with what an international donor like AFD is seeking to finance. So I think it's something good to keep in mind. If we go now, yes, under the market positioning. So here is just an example of institution with whom we had some information on their, let's say, commercial conditions, so interest rates compared to what we can observe on their respective markets. So it just to give you an idea of their, let's say, competitive position in their market, and also the coverage they have in the local public sector, so the local government sector. But again, here we are lacking a few data, so we are still finalizing the study, and so it's not comprehensive, unfortunately, at this stage. And maybe to finish with the main constraints that we can observe, and that basically prevent rapid development of the lending activity in favor of the local public sector. For SDB, you can see here, it may have to do for some of them with regulation, such as, for instance, the risk ponderation for LRG exposure in some countries. There is, and I think Emily quoted that at the beginning of the session, and I think we will also expand more on that aspect, because I think it's really crucial, is the quality of the pipeline of projects brought by the local and regional government for the financing by the AZB. And so here there is probably something to improve on this aspect. It may have to do also with the budgetary framework of the local and regional government. So all the rules, the fiscal rules that prevent them to go to debt, or at least that put some some conditions, and sometimes it is a bit cumbersome, and the borrowing limits applying to LRG can be kind of constrained to access financing. And there is also the approval process. So at both levels, so either at the level of the LRG, local and regional government itself, or at the level of the SDB, with sometimes a very lengthy process to get all the authorization from the federal or central administration for the loan to be implemented and disbursed. So it's something also that can refrain or slow down the financing of LRG projects. If we look now at what could be a constraint for international donors, I think to what I just quoted, I think we can add local currency. That is also something that we as international donor have to deal with, and it has a cost, and sometimes it may put ourselves out of the market in terms of conditions. So it's something also to keep in mind, and something which is, I think, less the case in Latin America, because SDB are pretty much sophisticated. They are present, as I said before, often since a long time. The institutional framework is quite also advanced, because the decentralization process is quite advanced in Latin America, not in all countries, but in many of them. So as a technical assistance needs for the local banks, which is an issue we can have in other parts of the world. I'm not saying that it is completely absent from Latin America, but maybe it's less relevant than in other parts of the world. It can be in fields like environmental and social aspects that some need are still there, but good progress have been done over the past years in that respect. Maybe also processes and procedures around the appreciation of the credit risk of the LRG can also be somewhat improved, but basically it's not the main constraint if you compare with the local currency, which is very hard, I think, implement in some situations. So just to conclude, I will say that in terms of de-risking itself, we have also many countries in Latin America where it exists some system of pledge revenue, intercept, or sovereign guarantee, like in Brazil, for instance, that makes the de-risking process less relevant. In other, we have also SDB with large room of maneuver before being exposed to concentration limits. So with no, let's say, present or urgent need to de-risk or to optimize their balance sheet. Maybe in other countries, and I have in mind maybe Colombia, for instance, risk-sharing mechanism can help SDBs to broaden their geographical coverage, and their coverage maybe to intermediate cities, mid-sized to small-sized cities that are let's say, that are facing more difficulties in accessing financing than capital cities or big ones, and to do so, maybe systems of guarantee or de-risking can help reaching this objective. I will also spend a few words just to tell you that at AFD we have developed some guarantee products, but for SMEs, and I think my colleague Ahmad, who will take part in the second one table, will tell you a little bit more about that system. We have just signed also a guarantee product for private and public banks in Africa, which is backed by the European Union with the EFSD, so the third generation of the fund I mentioned a bit earlier, which is not yet operational, but I think we will probably draw on this experience to see whether or not we can also expand this kind of de-risking product to other geographies like in Latin America. So that's it for me, and I will be happy to answer your questions in the Q&A session. So thank you very much.
Thank you so much, Bertrand, for this great presentation. It's really good to have the point of view of a very strong bilateral donor on urban development and local and regional governments like AFD. I will kindly ask the next speakers to stick to the time allocated, because I was told that we really have to close at the time that we have planned from the beginning. And now I'm happy to welcome Mr. Juan Martinez, who is a structured finance senior specialist at IDB, and he will make a presentation about the role of MDBs in supporting SDBs. The floor is yours. Thank you. I think we cannot hear you, Juan.
Hello, can you hear me now?
Yes, that's
okay,
perfect.
Great. Thank you, Emily. Good morning. Bon dia. Hola a todos. Mi nombre es Juan Martínez Álvarez. Soy especialista senior en mercados.
Juan Martinez Alvarez. I'm a senior specialist at the Structured Finance Senior Specialist at Institutions for Development Sector and Connectivity Market and Finance Division under Juan Ketterer. It's such a pleasure to be here with you to talk about such a fascinating topic, which is de-risking instrument development. As we just heard, we don't have enough within our countries for the to finance, and that's where national and subnational banks play a major role in reducing and leveraging de-risking. I will talk about risk mitigation and, or rather de-risking, and what multilateral development institutions can do to help. That's just as a preamble to the roundtable discussions. In order to attract private capital, we need to de-risk. Sometimes we have high value, high economic and social value projects, but the profitability and risk profiles are not the best to attract private investors. The main barriers faced by subnational projects, as opposed to larger ones, are preparation, size, and solvency. First of all, locally, there are fewer well-prepared and well-designed projects that makes it difficult to assess profitability and also risks, whether environmental, economic, or social. And that makes it less palatable to private investors. So they're usually small too, so that increase transaction costs and reduces appetite for risk, because the risk is perceived as high, and so are costs. And solvency of local authorities is usually low, with a low credit rating. These public sector, these SOEs and local governments make them less attractive to investors. Secondly, the main focus is credit risk. If we, for a second, target the agenda in Latin America to fund fair and sustainable infrastructure development, we need to de-risk do de-risking, and to do that we need infrastructure that is sustainable. And we have credit risk that resides with local authorities. They're not very solvent or liquid. They can't work with their own resources or even through their own partnerships with local stakeholders. In order to get to a green economy, we need investment that allow for cleaner production that is more climate change resilient, and that's where we run into credit risk for companies. And not over 90% of our companies in our part of the world are SMEs. They're seen as risky, and banks require collateral that are sometimes up to 3 times as much as the loan itself. And to have a fairer territorial inclusion, we need populations that live in remote areas. They're usually low-income people who live in very underprivileged areas. So we have personal credit risk. Usually these people do not have a credit record, and so they have no credit rating, so that does not make them credit worthy. Thirdly, there are three key points that need to be worked on to support projects, persons and businesses, and have access to credit, to have better project preparation, enlarge the scale, ramp up the scale of projects, and to improve their credit profile. Doing this is fundamental to attract investment from private sector locally and internationally, and that's done through good project preparation with good planning and based on good standards. And in order to have lower costs and de-risking is also key. We need to cluster projects, and they need to be standardized so that as to reduce transaction costs. Clustering can be done from the bottom up through coordination with states and municipalities, or from the top down by developing sectoral and local programs at the national level too. But what we need to do is to improve the credit profile through financing instruments. In order to attract private investment in infrastructure, we need to improve credit profile of public agencies, of government agencies, mainly through guarantees and collateral to back up public payments, such as buying electricity or power from a local company. That can be done through a PPP or by guaranteeing some type of local investment. Also, contingent credit lines are important, and that's for macroeconomic risks and operational risks. And the idea is to inject liquidity. Subordinate liquidity is also very important, and to back up the risk and bring down the risk in case of default. As to the credit profile for people and companies, the main instrument is credit guarantees to expand the horizon so that tolerance for risk with the private sector goes up and they're willing to provide more loans. When the private sector does not provide guarantees, concessional funding can be provided with a view to creating a credit record so as to improve the chances of creditworthiness in the future. The fourth point is that subnational development banks have a key role to play in funding projects, businesses, and persons at the local or national level. They have capillarity locally and better knowledge of the on the ground, and so they're best positioned to manage risk in such projects. As I said, subnational banks can have a relevant role to play in all three levels in bringing down risk and fostering better funding and also improving the scale. Subnational development banks can develop project preparation facilities. There are several, BNMG in Brazil, for example, revolving credits for infrastructure, also increasing the scale and homogeneity of projects so that they're easier to assess and create thus a financial incentive for investment by the private sector. That's done through support to standardizing procurement and also creating incentives and clear rules for municipalities to have access to SDB instruments. And there are good examples in Brazil and elsewhere in the region. And then also improve the credit risk profile, which is very important to attract private investment. Infrastructure projects with subnational banks can improve funding conditions for local governments by providing guarantees for green bonds issued, and those that are done through PPTs. That's where the SDBs can improve bankability or the credit worthiness of these projects. And that's through contingent credit lines to inject liquidity should it be needed to improve the stability of the PPPs, for example, and guarantees to back up payments of the projects to ensure recovery if they're in case of default by the public sector. And when it comes to businesses and persons, the main goal would be to create or to reinforce credit guarantee funds. And that has become even more important with the advent of COVID. Finally, multilateral institutions can provide different types of support to subnational banks in de-risking. First of all, technical support and funding to develop facilities to assess opportunities and to set priorities and prepare better projects, sounder projects. Also help develop de-risking instruments at the subnational levels by providing AAA guarantees and cheap loans, also help with PPPs and expand guarantees for credit for those who are disenfranchised and left out of the system. And there's a whole host of instruments that may be available. And finally, multilaterals can also help build a regional agenda. And mobilizing donor funds is key, and donor resources based on guarantee schemes are very important because they can bring down the cost of de-risking structures. And finally, creating an institution that is specifically designed to absorb risk. There is no regional public institution tasked with insurance or reinsurance to de-risk. But of course, this calls for political consensus, and that's a bit tricky. So at the end of the day, there's room for a change here where multilaterals can provide support to SDBs to de-risk and attract the private sector to finance fair, sustainable transition, both urban and rural. Thank you. And with that, I conclude my presentation.
Thank you very much, Juan, for this really great presentation that really demonstrates the high potential for reinforced cooperation between MDBs and SDBs related to guarantees and de-risking instruments. And now I'm really happy to introduce the next steps of our workshop with two roundtables. The first one gathering SDBs, and the second one gathering their technical and financial partners. And I'm very also pleased to say that we have several distinguished members of the steering committee representing the diversity of the Alliance of SDBs in the audience. We have, for instance, Jorge Albache, the Vice President of CAF for Private Sector, who makes the honor to be here with us today. And I'd like to leave the floor for the moderation of the two roundtables to Dr. Barbara Samuels. Barbara is an internationally recognized global expert in international finance. She works with many international institutions on innovative approaches toward financing sustainable local transition. Thank you so much for being here today, Barbara. And I remind you that you can consult the bios of the speakers in the chat. Thank you very much.
Thank you very much. I'm honored to be here. This is pivotal, and I salute the Alliance for bringing everyone together. As Antonio said, Juan Antonio, this is essential. We've got to be able to deliver on the localization of the SDGs and the Paris goals. So we're going to jump right into the first roundtable. And we're running about 25, 30 minutes late, I think. So if I could really challenge each of our wonderful panelists to reduce their comments from 5 minutes to 3 minutes, if possible, and to be punchy. We're looking at what is your perspective from the subnational development banks about how we can perform better through the mobilization and development of guarantees and de-risking. So we're going to start off with roundtable 1 with Andre Cutler, who is Deputy Operations Manager of Banco Regional de Desenvolvimento de Extremo Sul, BRDE. And we're going to ask Andre to really help us understand what are the conditions that enable Brazilian municipalities in your jurisdiction to access debt. And what do you see as the key risk mitigants and solutions to increase finance for municipality? Andre.
Bom dia, Bárbara. Bom dia a todos os demais panelistas.
Good morning, Barbara. Good morning, everyone, all the members of the panelists. BRDE is a regional development bank. The 3 partners of the bank are the 3 southern states of Brazil, and we work with long-term financing. Municipalities today are 5% of our bank portfolio that is historically more focused in the private sector, but we are working on resources for municipalities, working with partners like the IADB. In terms of the guarantee structures for funding of municipalities in Brazil, we have very sound regulations, starting with the Constitution of '88 and also federal laws of responsibility. The municipalities fit into those norms, and I believe this is an advantage for Brazil because it also makes municipalities be organized with their accounts in order so that it makes it easier to have access to financing. BRDE has been financing many sustainability projects, which is very important. Also photovoltaic energy generation, LED bulbs, leading to the reduction of energy consumption and reduction of greenhouse effect gases. This is in the core of what we do at the bank, and we are strongly focused on that. As I said, municipalities have to have their accounting in order, and the structure of guarantees is focused on the relay of taxes collected by the federal and the state governments. This flow of resources that come from tax revenues, they are shared with participation funds. There's a limit to the guarantee, and therefore there's high confidence in financing this area. We have also some guarantee funds from the BNDES, for example, for small and mid-sized companies, and something that is still very incipient in Brazil is PPPs. It is evolving more now, and we hope to have international funding to help improve risk mitigation for these operations. FMDV and IDB was mentioned. These are banks with capillarity in the region, therefore able to finance small projects. So we are using those sources of financing and this risk mitigation. Thank you, Barbara, very much.
Thank you, Andre. It was great to hear you bring forward the concept of ring fencing and structure that your very strict national laws have created at the subnational law level. And I think, as Juan had mentioned in his presentation, this is very important for peer sharing, is to really look at the financial engineering that can enhance guarantees and bring in the private sector. Ring fencing, absolutely critical. Going to our second speaker, Francisco Amador Ramirez. He is Director of Financing and Technical Assistance Center for Banobras. And my questions for you, Francisco, are if you could tell us about your contribution fund for social infrastructure, the FAS, and how you really see your effective actions in helping municipalities develop project preparation, as Juan pointed out, critical in solving this problem that we're having. And what are the main characteristics and what is the process? What can we learn from your experience? Thank you.
Muchas gracias, Bárbara, y a toda la alianza por esta invitación.
Thank you, and Barbara, and I'd like to thank the Alliance for this invitation to be a part of this very important panel. Banobras is the first development bank in Mexico, and it's fifth in terms of the size of our portfolio within the country, in our whole financial system. Our pipeline is huge. Our portfolio is huge, but municipalities have been left out of financing over the last few decades, especially those municipalities that are least developed, technically speaking. And in some way, this has encouraged us to set up a financing funding structuring mechanism for mechanisms in extreme poverty, very low income, and that have no access to resources. They're not considered credit worthy. And this is a credit modality that supplements other sources. So Banobras, under the legislation on resource distribution coming from local taxes, and in keeping with our legislation on fiscal coordination, which has been in place for about 20 years, we have a fund, a contribution fund for social infrastructure, which was set up by the, and is managed by the Welfare Secretariat, and is meant to provide resources to municipalities for social work and to benefit and public works for population, the swaths of the population that are in extreme poverty, in order to bridge inequality gaps in terms of infrastructure, drinking water, sewage, and drainage, and basic health infrastructure, hospitals, also education, schools, etc. So this fund that we have is part of our federal budget, and so each municipality gets a part of this pass-through, and very importantly, CONEBAN, the National Board on Social Development Policy, is in charge of ascertaining what the levels of backwardness are and poverty are, and decides how much they each get. So Banobras leverages the legislation in terms of funding in general and financing. So in 2008 and 2009, the fiscal coordination law was amended so that these resources would be eligible to be earmarked for loans to municipalities. They may use up to 25% of the contributions provided for the municipalities as a source of payment.
And this way we continue moving forward. And what the bank does, it structured a financing program where Maniobra, by using the municipal administration, we forward the resources and it provides funding using, with the support of legislation, those inputs. And it is, again, it's a part of this fiscal legislation. And what our main objective is to expand the benefits for these efforts aimed at combating poverty. One relevant issue as well is, and the aim of this type of funding, Manobras, is a builder and structurer of these funding mechanisms. I could discuss the global and overall banking structure and strategy. Now, specifically, there is an impact in the reducing the gaps of inequality with the support of the bank. We're also addressing gender issues. In fact, most of the basic infrastructure issues, basically low income, really boiled down to addressing and alleviating the challenges suffered by women in particular, where mothers and young girls are still carrying water to their homes. So this is one challenge. And we also have environmental issues. In that regard, we are, through the issuance of green bonds, in fact, now we are also preparing gender bonds where we stimulate these resources, and the governing board of the bank maintains also preferential rates for loans for these communities. So how do we structure this type of financing? Well, and here we get back to risk control. This funding is provided with municipal timelines and of 3 years. And we clearly identify the targets because it is part of the, again, the structure of these supports. We use, as I've indicated, fixed rates to ensure that it is clearly delineated. There's no variation or variable rates. It is, again, transparent, no variable rates. And one thing I should also mention is that we use a global trust structure. So basically, we're looking at structuring the, well, first we start by authorizing and working with local authorities,
Francisco,
provisions.
Francisco, you are a wealth of financial engineering and solutions. I thank you. But unfortunately, I think along with Andre, your points are so critical. We need to, as I think the opening was, this needs to be the beginning. You clearly have a lot of financial engineering and solutions that would be of great value to the other subnational banks. So I'm sorry, but I'm being put to the test here. I'm supposed to be the police, so forgive me. I have to stop you. But I think it's really important, again, this blending. You know, we talked about ring fencing. We have the blending of different sources of finance with the engineering and using new instruments. And these have to be scaled. So this is very helpful. Okay, if we can go to our third speaker, where we will ask Diana Adi Robles, who is Deputy Director of Guarantees for NAFIN. So I have two questions, Diana, for you. And how do you propose going forward to continue and to scale guarantees for SMEs, so critical to job creation and the economy? And what do you see as the challenges? You know, what is it that everyone needs to do to help you be more effective? Thank you.
Muchas gracias, Bárbara. Buenos días a todos.
Thank you very much, and good morning, ladies and gentlemen. Let me just mention the issue of guarantees and access to financing. What we work with is credit institutions, such as we have seen, and with the expansion, this includes a mechanism for diversification of risks in terms of working with the percentage of objectives. And the project includes national coverage. In particular, I'm sorry, she's coming in and out. The product also tries to take advantage of the coverage, and this includes this has a multiplying effect. I'm sorry, she's coming in and out. Her sound is coming in and out.
Sin embargo, considerando que las aportaciones de los gobiernos estatales están limitados a las asignaciones anuales que reciben, los portafolios generados resultan insuficientes.
Yeah, the sound isn't good.
You know, Diana, sorry, can I stop you? We're having an issue. We can't hear you. Should we come back to you? Can you see how to reposition yourself to have better internet connection? Or
en este momento ¿me puedes escuchar?
Is that better?
¿Sí? ¿Es mejor?
¿Está mejor todo?
Better, a little better, yes.
Sí.
Yes, that's better.
Puede continuar. Gracias.
Thank you. Just to continue with the question, Barbara, with regards to giving to give that continuity, we develop a pilot project that provides for support for the portfolio, maintaining the favorable credit conditions for businesses, as well as preferential rates for these customers. This includes a methodology where credit institutions will include the capital factor and credit risk. The risk is included with the credits that are guaranteed. The commissions are reviewed quarterly. The commissions are differentiated based on creditworthiness, and the line can increase portfolio for any state that participates. With this pilot project, it supports addressing the market demands and economic development priorities that nations consider a top priority. Favoring these guarantees not only reduce challenges, but also increases the capital reserves. For credit institutions, to conclude, we need to highlight the role of our guarantee resources in focusing on specific priorities. Very complex problems such as financial inclusion. And it depends on non-controlled commissions. It is for this reason, it is so important to create a contingency plan that will support these initiatives. Thank you, Barbara.
I'm very sorry. We lost a bit, Diana, of what you said. But again, a very important focus area, SMEs, also for infrastructure in building in local public services. So I think, again, this is a really important topic to build throughout the subnational banks and to focus on what's working and what's not. So I thank you, Diana. Our fourth speaker is Jose Antonio Cortes Barretos, Deputy General Director of Business Promotion for FIRA, which focuses on private sector, local private sector actors in the agricultural area. And for Jose Antonio, if you could tell us your role in how it works in financing local actors in agriculture, as well as what guarantee mechanisms you use and what you find working. And again, the ultimate question always, how do you scale? Thank you.
Gracias, Barbara. Thank you very much, Barbara. Good morning. Well, as you indicated, this is an institution that has more than 167 years in operation, working in providing support for the food and agriculture industry in Mexico, in those areas with less than 50,000 inhabitants. So we are a second-tier development bank, and we're supported with a series of mechanisms that help to provide funding for the agro and food industry SMEs. One of the most important challenges that we have seen in launching financial inclusion in the sector is the challenge because of asymmetries in information, as Juan indicated. Here we see significant asymmetries in information and insufficient banking resources, and in particular, a lack of collateral for this type of loan. So we offer a guarantee service to such extent that we share the risk in working with the various financial intermediaries who we're involved with. So here, I would also like to comment, Barbara, that this guarantee is a traditional guarantee. We share 50% with the financial intermediaries that provide the funding for the food and agriculture sector. Now, in this area, however, we have developed jointly with the Ministry of Agriculture a guarantee fund, a national guarantee fund that is targeted to those small-scale producers with financing up to $50,000 that enables the creation of a guarantee for losses for short-term and long-term loans, so that each financial intermediary will be in charge of their portfolio and that can provide guarantees for meeting that part of their commitments up to 100%. This has enabled financing on the order of $17 million, and it has a multiplying effect of the resources that the Ministry of Agriculture has made available of more than 42 times. It's had that multiplying effect by 42 times. So this is a component that we've seen and how it has developed over time in providing guarantees to empower the resources. And in addition, I would also like to comment that in this area that Juan Martinez also referred to, I think it's a very clear reference. One of the points that he raised, that we not only work with funding and guarantees, but we also are convinced that in order to be able to get those resources out to the community, we provide technical assistance resources where we connect small producers with the marketplace, a potential marketplace. So we bring together large industries that already are well positioned in the market to ensure that they can tell us exactly what resources, what are their requirements from the small producers. And that way we provide technical assistance to these small scale producers to such an extent that they're able to provide over time the product that the larger businesses require for marketing at both national and international levels. So this technical assistance is provided through support, through a network of technical advisors that we have, and that provides the characteristics of the technical assistance from, again, the sector overall. So what's really important here is that we've been able to expand this over the long term. It's not just during one season or cycle, it's over a 5-year term. So the business is able to retain the payment of the funding and makes and ensures more continuity to the financing. So we have these guarantees that we provide and the backing for these. I think that's a very clear example of the program that we have been undertaking and providing to providers. And it goes hand in hand and dovetails back with some of the ideas that Juan Carlos had indicated at the beginning. I don't know if you'd like me to add anything to that.
I think that's absolutely inspirational. I mean, look at the problem of scale. Look at the G20. If you take what you're doing and think about the potential for scaling at the subnational development banks throughout Latin America and the Caribbean, this is wonderful. And I want to introduce or reinforce a point that was made by Juan at the beginning, which is being able to look at reinsurance. And a reference point, for example, is the African Trade and Insurance Agency in Africa that did 4.8 billion of insurance in Africa, of which 3.8 billion was reinsured through Lloyd's and other private sector insurers. So if you build these individual kinds of models and you replicate, and you can then leverage it through a regional entity, as has been done successfully in Africa and other places, I think this is inspirational, and thank you. So to our last speaker, Diego Pava, the public sector superintendent for Rio Grande do Sul Development Agency, Bandasul, 3 questions. First, you have a focus in de-risking instruments and guarantees related to municipalities. If you could give us a sense of what those are, the main challenges you see, and of course, the solutions that we need to help you with and scale across the region. Thank you.
Good morning, everyone. Here in Brazil, we have we can guarantee or give guarantees to municipalities. As Andre had said in the first panel, we can use the flow of taxes that go from the federal government to municipalities as a guarantee, as a collateral. And given this situation, it's relatively easy to finance basic infrastructure. When I talk about basic infrastructure, I'm talking about school revamping, paving roads, sometimes sanitation. So based on that, our main objective today is to convince municipalities to start thinking about other kinds of projects. For instance, projects more oriented to environmental sustainability in cooperation with other municipalities. Our main obstacles to make this happen in Brazil, and I remember that in IDB's presentation in Brazil and Argentina, there is cooperation between municipalities, and that's true, that exists. But this cooperation bump against legislative difficulties. You know, it's difficult to finance directly this joint action between municipalities. Brazilian legislation understands that if I have 25 municipalities around a project to build a recycling plant, for instance, in the end, I'm not going to finance the association. I'm going to finance the 25 municipalities separately. And this gives rise to a lot of difficulty. How can we make this happen? And here at Bandesul, our overarching objective is to try and make these larger projects happen. In the past, we tried to finance some sustainability projects for individual municipalities, and we ended up by having difficulties. Sometimes these are very large projects for a single municipality. And, when there is a different administration, the new administration thinks the project is not appropriate, the risk was too high to finance that project. Sometimes they think the project is too risky. On the other hand, when you gather several municipalities, they are afraid that some might give up along the way, because sometimes you need 20, 25 municipalities to make the project feasible. So the difficulty today is how to decrease the gap between municipalities, or the distance, and in order to make larger projects with a large social environmental impact. Thank you.
Diego, thank you very much. I think you bring up this very important principle of aggregation and pooled finance. And of course, we have successful structures that have worked Tamil Nadu in India. There is a water facility in process in Kenya. That is, all of these are taking too much. I think Banobras did one that failed years ago. Colombia had another one that failed. We need to be able to get economies of scale and reduce transaction costs to get effective scaling, especially with the climate technologies. And this, I think, is another key area for the Alliance to share and to work on. And your point about the regulatory framework for being able to use taxes as collateral, all very rich. We thank you. Now, we have a question, because we are supposedly at the end of Roundtable 1, and we haven't done our peer-to-peer exchange. Amelia, can I ask you, should we collapse the discussion to the end of Roundtable 2 and jump forward?
Yes, let's do like this. Thank you.
Okay, very good. So thank you very much. Now, we're building a marketplace here, right? We have the views and programs of subnational banks. Now we have a roundtable of development finance institutions, the DFIs, that are absolutely central in the region, as well as other partners, to be able to really work and help strengthen the ecosystem of subnational banks in Latin America and the Caribbean. And to start that discussion, again, we go back to the leadership of AFD. We have Ahmed Badir, who is in the financial systems area of AFD, who is really going to help us understand what was referred to in the beginning by your colleague, the AFD work on guarantees, and how they may be able to be relevant and scaled in Latin America, as well as to public banks. Please, Ahmed.
Okay, thank you. So first of all, let me start by presenting very briefly what AFD is currently doing with subnational development banks in Latin America, because we're providing technical assistance. So we're providing credit lines to several subnational development banks in Latin America, and we're complementing those credit lines with grant-funded technical assistance. So just to give, because I know I only have a few minutes, to give very brief examples. So we're supporting BRDE, so the regional bank for the development of the extreme south of Brazil, as well as BDMG, so the development bank of Minas Gerais in Brazil as well. So we're providing them with technical assistance to support them and the identification and financing of projects that have a high environmental and social added value. We also support them to implement a mechanism to analyze the impacts of the projects in terms of the sustainable development goals. And we're also providing to them support and risk management, especially in the area of climate risks. So other types of other banks that we're supporting in the region includes the National Bank of Costa Rica, BNCR. So we provide to them technical assistance to implement a climate strategy. We're also supporting CABE, which is the Central American Bank for Economic Integration, also known as BCIE in Spanish. So we're providing them support to implement a climate strategy and a gender strategy. And also we have technical assistance, which is adapted to the mandate of several subnational development banks that have a specific sectoral mandate. So we're providing technical assistance to Fondo Mi Vivienda, FMV in Peru, for example, focused on the area of housing. And we're also providing support to FIRA in the area of agriculture. So to talk about guarantees and risk-sharing mechanisms more specifically. So unfortunately, I don't have examples from Latin America, because even though Latin America is eligible for AFD's main risk-sharing mechanism, we haven't managed to deploy our guarantee instruments in Latin America until now. So I think this workshop is a very good opportunity for us also to promote our guarantee products. And so for all the participants that are present today, please, if you feel that those guarantee instruments would be relevant for your activities, so please do not hesitate to contact the local AFD office. So our main risk sharing mechanism is called ARIS. So it's a guarantee mechanism whereby AFD bears part of the credit risk borne by the bank. So when a bank extends a loan, so AFD bears 50% of the credit risk. So it's a mechanism which is mainly targeted towards SMEs. So it's really to encourage subnational development banks to lend to SMEs, because as most of you probably know, so SMEs in most countries have a lot of difficulty in accessing credit because they're deemed riskier by banks. So the purpose of our risk sharing mechanism is really to allow banks to lend to SMEs. So just to give you the very briefly, the main characteristics of this guarantee product. So we have both individual guarantees and portfolio guarantees. But right now we're prioritizing portfolio guarantees because our experience has shown that they have a much larger impact compared to individual guarantees. So for our portfolio guarantees, they cover loans that have a maturity from 1 to 7 years and an amount from 10,000 euros to 300,000 euros, or the equivalent in local currency, because this is one of the added values of our guarantee products. It's that they can be extended in local currency. So like I said, the guarantee covers 50% of each individual loan in the portfolio. And so when we sign the portfolio guarantee agreement with the bank has 24 months to include eligible loans in the portfolio. So it's important to also add that it's not a first loss guarantee, it's a final loss guarantee. So when there is a default, the bank receives an advance of 50%, but then it has to try as much as possible to recover part of the loan and to prove that it has carried out measures to recover part of the loan. And in a maximum period of we give the bank a maximum of 3 years to carry out those recovery actions. And then when the 3 years are over, so any amount that the bank has managed to recover is deducted, and so the remaining amount of the guarantee is paid to the bank. So this is how it functions. And so for the banks, it's for most banks with which we are working as part of this risk-sharing mechanism. It's quite attractive because there's only an appraisal fee, which is paid when the guarantee agreement is signed at the beginning. So it's 1% of the overall portfolio amount. And then there is a half-yearly guarantee, but which is only calculated on the outstanding guaranteed amount. So to give you an example, if we sign a portfolio guarantee for 20 million euros, so the appraisal fee is paid on the 20 million euros, and but then every 6 months, the bank sends a report to AFD listing the loans that it has included in the portfolio, and so the half-yearly guarantee fee is only paid on the on this amount, on this outstanding guaranteed amount. So this is very briefly these are the main characteristics of our risk-sharing mechanism. So we have fine-tuned it and prepared other guarantee instruments. So my colleague Bertrand was talking earlier about CITIRES, which is a specific risk-sharing mechanism to encourage subnational development banks to lend to local municipalities. But I'm not going to enter to describe it in detail because unfortunately it's only African countries are eligible for this instrument. But we hope maybe in the future we can expand it and enlarge it to include Latin America and other regions as well. And we also have another risk-sharing mechanism, which is called URES, which is quite similar to ARES, but it covers 70% of loans instead of 50%. So it's even more attractive for banks, but it targets SMEs that have a high developmental impacts. So which, for example, SMEs that work in the green economy or in the education or health sectors, or that are led or managed by women. But again, I'm not going to describe it in detail here because it's mostly targeting member states of the ACP, so African, Caribbean, and Pacific, but not Latin American countries. So it's just, briefly to summarize, we have several guarantee instruments and risk-sharing mechanisms at AFD. So the one that I described at the beginning, ARES, it's, Latin American countries are eligible, and public and subnational development banks are also eligible. So please, if you feel that this product could be of interest to your institution, don't hesitate to contact the local AFD office. Thank you.
This is terrific. You inspire me to remember what we did years ago with the support of the Swiss government, a directory of risk mitigation instruments and structures that Latin, for example, for Latin, because we are trying to create a market. So the first thing we need to do is to provide the complete enabling information on what's available in the market. The great criminality of risk mitigation is consistently we underutilize what is out there. So I think this is really important. We need to understand your products. I also want to remind everyone of what Bertrand talked about, which I looked up is formerly in South Africa, the Inca Municipal Debt Fund, which has a first loss provided by SECO. Last time I looked, that was 5 million. And you had concessionary loans from AFD. So again, as he mentioned, if we have a proof of concept there, then it would be eligible for Latin American countries. We need to have this marketplace of different experiments, proof of concepts, and replicate them with great gusto and passion. So thank you, Diego. Now, I think we now go to Alejandro. Are you there?
Yes, I'm here, Barbara.
Okay, thank you. Sorry, I got too excited on the last intervention. We have Alejandro Sorino, who's Senior Executive of Productive and Financial Sectors, both at the CAF. And my question, of course, is the CAF is all over the place in Latin America, absolutely fundamental. How can you contribute to the building this ecosystem of subnational development banks that will have better development and climate impact? Thank you.
All right, thank you, Barbara. As most of the participants spoke in Spanish, maybe I will switch to the language. CAF tiene un compromiso.
CAF has undertaken a commitment ever since its creation with development banking. And that must be said because with the unfortunate advent of the pandemic, CAF has tried to jump ahead by creating a facility, a counter-cyclical facility, support facility for banks in the region, development bank. That's $1.6 billion in 2020 that was created, and it's still in place. And this facility is made up of three major components. Number one, addressing emergencies faced by vulnerable populations in terms of health, food and transportation, etc. Secondly, business financing operations, so specifically to support micro, small, and medium-sized enterprises, and because they're the main employers in the region. And thirdly, to fund institutional capacity building in structures such as regional and local governments and others. Those are our mandates, and that's what we focus on. First of all, CAF has several support mechanisms, of course, for subnational development banks through loans, guarantees, and equity investment and NTAs as well. So here, what we have in mind are several issues, such as the creation of strategic partnerships and building these partners. And these subnational banks, development banks, are natural partners as we see them. And we were just talking about the mechanisms. And one of the issues that we were talking about earlier today is guarantees. So guarantees is something that we work with directly or through these financial development institutions. That's done for SMEs and also for private investment in infrastructure. And these, of course, are most relevant issues. And what we do is we work through publicly held guarantee funds or private or reciprocal guarantee funds. And of course, development banks have a major role to play. They have their own guarantee funds, and CAF endeavors to coordinate them and work with them by providing knowledge, support, and different mechanisms through shared collaterals or secondary loss collaterals, which is what we call compliance finance guarantees. So we need to target businesses, SMEs specifically, for these to improve funding, their better terms and conditions and better rates and repayment arrangements, etc. There are several things at play there. For the public administration, public policy is part and parcel of development, of the development ecosystem. So that's where public administration will support these initiatives to bolster SMEs, to improve and enhance competitiveness and tax collection, etc. And also financial institutions, they are the intermediaries, including development banks, of course. Through guarantees, what we get is liquid coverage, which is very important and better than just in rem guarantees, which will require fewer reserves and resources and reserve requirements for the banks. And it also promotes a good financial culture, which is fundamentally important. But CAF also seeks out other partners. Aside from development banks, we seek out this other partners, a comprehensive landscape, including networks of financial institutions, ALIDE or CELABAN, and others. So other networks based on the type of sector that in question. And in terms of guarantees, we have REGAR and other guarantee and surety associations in Latin America. So there are many fronts in which we work. There's so many needs. And of course, there's a need to share these guarantee needs with banks who do the fronting and also working in infrastructure. And these are PPPs that are so essential. So in sum, the idea is for CAF to work with partners, hand in hand with partners. That is the main principle. And development banks are, of course, partners. Building strategic partnerships is of the essence because that will add value at a lower cost and more expeditiously, thus creating major synergies and efficiencies. And at the end of the day, CAF should be seen as an anchor ally by subnational development banks when it comes to building new financing mechanisms to rekindle the business sector and the production sector in order to reactivate the real economy and promote green funding, which is something that we're really focusing on. And our purpose is to become the green bank in Latin America par excellence. And SDBs are our natural allies in that regard, our partners. And with that, thank you again for this opportunity, and I'm here to answer any questions.
Alejandro, thank you. The point you put forward is the new mindset that we all need to adopt. And I think when we had our welcome comments by Juan Antonio, this change in thinking, this change in finance methodology, we have to do blended finance. We have to bring in each other and the private sector, pension funds, the whole gamut, equity from infrastructure partners. And so these concepts of being an anchor partner, of who is the relationship manager and building a donor mesa that can unlock the private sector. So this is another key strategic essential value add of the alliance is you're building today new relationships. This is the beginning. Very quick, bang, bang, bang. But this is seeding the network and the ecosystem that everyone needs to be successful. So I thank you for laying that concept down on the ground so we can build up from that. Thank you. Now we move on to Miguel Mendez, who's head of partnerships and international cooperation for CABE. And again, the question we ask you, Miguel, is how can CABE contribute to this new ecosystem of Latin American, Caribbean, subnational development banks to deliver results? Thank you.
Muchas gracias, Bárbara.
Thank you, Barbara. Thank you for inviting me to this event. Instead of talking about what can be done or could be done, let me tell you about what we're already doing and we wish to continue to do. I think it's been clearly spelled out that we're faced with an emergency with the advent of COVID here and globally, not just in the region. And we have wasted no time in responding and creating a facility to support both the public and the private sector in our countries in dealing with this emergency and rekindling the economy as soon as possible, relaunching it. And several sub-facilities were also set up within the program, including grant resources and loans for governments, also for to boost liquidity and inject liquidity to central banks, and also to buy vaccines, for the procurement of vaccines by countries, which has been a strategic factor in reactivating the economy in our region. And finally, but not last but not least, also clearly a facility to support the financial system to cater to SME funding needs. As you know, our economy has a large informal sector with SMEs playing a major role in economic growth and through that, a well-being for the population. And that's why we provided to national banks and subnational banks $650 million to be able to support SMEs and help keep employment and help them fund them so that they could stay afloat, as well as adjust to the changes brought on by the pandemic. And that is when financial institutions have tapped into $476 million in this facility. And what's important about this is the following: is this enough? You know, we offered all of these these facilities with concessional terms, different from what we had before. But the answer to the question is no, it's not enough. Because at the end of the day, even though there was liquidity and banks were in a position to lend, there were major problems involving risk. And there was a need for a guarantee fund to allow national banks to mitigate the risk of lending funds to SMEs, and also encourage access to funding by SMEs that were not creditworthy in the past due for lack of collateral. That was, and I think we heard one of the panelists say that you actually have to show that you have 3 times as much as you are applying for by way of a loan. And that's true in many of our countries. Also, very importantly, we need to mitigate risk, but also we need to promote the engagement of people who are usually left out and don't have as many opportunities. And here we're talking specifically about women. So this guarantee fund also caters to women and trying to facilitate access to credit, to loans by women. We're also in a region that is highly vulnerable to climate change. So we're making major efforts and leading the region's efforts in terms of investing in fighting climate change by all countries. So this guarantee fund also backs up operations with an impact in terms of climate change, adaptation, or mitigation. So that's what has been done thus far in that regard. The guarantee fund has $37 million thanks to our own funds, the European Union, KfW, UN Women, and more recently, the ICDF Taiwan commitment. But once again, is this enough? It helps, but we still need to do more. And that's why, together with the guarantee fund and with these loans, we also provide technical assistance resources for SMEs to develop their own projects that are creditworthy, they're bankable, and so that they can apply for loans. And other resources to support companies to have venture capital available to them or seed capital available to them. And that's for SMEs. And going back to the presentation by Mr. Martinez that I really liked, there's the issue of preparing key projects. And once again, and this for the future, a fund has been created for to help build projects on climate change to create a pipeline for projects to fight climate change. In the region, we have $17.5 million, and these are non-reimbursable grants for the countries to develop bankable projects to be financed by CABE and other partners. And we work with co-funding with the Climate Green Fund and the Republic of Korea and others to be able to leverage the use of resources in the region. Thank you.
Thank you. Thank you, Miguel. Again, very important. I think looking at financial engineering, how do we do more? Your question with guarantee funds, absolutely essential. And I think we'll hear more on technical assistance for asset liability management and optimizing the leverage of limited public funds. That's really important, and pairing it with project preparation. One thing, again, to think about is how all of you as subnational development banks can leverage yourself by sharing resources. Take project finance lawyers. The African Development Bank put together the legal support facility, which provides lawyers to projects all over Africa. Again, how do you get economies of scale and project preparation to meet investor requirements, both public and private? Thank you, Miguel. We're going to run ahead again, chop, 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 because we are late. Our next speaker is David Bronswag, who is the coordinator of green finance from the World Resources Institute, WRI. And as many of you know, WRI is a really important force to drive ahead solutions to climate disaster and change. And of course, my question to you, David, is how can your existing work focused on Mexico City really be leveraged to address the same issues that are all through the continent? David, please.
Thank you, Barbara, and thanks again to the FMDV and the Alliance for putting this initiative together and this important discussion. I will start by answering this important question you asked, Barbara, about how can we promote solving this problem in a bigger scale. And WRI is focusing on testing these initiatives that are basically pilots of innovation for projects aiming to reduce many of the climate adversities we face. And particularly, I'm going to talk about a project we're doing in water infrastructure to provide better water sanitation and reduce risk of flooding. So for the project, I'm going to change a bit to Spanish. Sí, entonces voy a hablarles un poco de este proyecto.
So let me tell you about this project that we are coordinating in Mexico City. Mexico City, as you will know, probably is on a lake, sits on a lake, but it does face serious water scarcity issues. And it's also facing even more dire scarcity problems in the near future. The problem with water is that by trying to cover all of Mexico City, we are talking about very many stakeholders who would benefit from these solutions. What we want is medium scale actions to create smaller and more manageable work groups that become more scalable. What we're doing at WRI, as I said, is to pilot these projects so that through our partnerships with development banks and multilateral institutions, development institutions, we can replicate these at a larger scale. So that's so important. Here, what we have is the risk created by flooding from storms, and that causes damage in both publicly owned and privately owned property. So the benefits would be felt by both stakeholders in both sectors. So what we want is to prevent either one of these stakeholders from becoming a free rider. So what we want is to create a sense of urgency, because as we see costs created by floods are a reality today and will continue to grow with time. So the longer we take to act, the more we see that projects become less and less viable, at least at first glance. And we have to see this as a matter of urgency now, and we'll see the increases in the risks of flooding. So in closing, I'd like to focus on what Juan Antonio Queterer said, and also Alejandro Soriano and Barbara, going into strategic financing. What we want is to build better partnerships to create technical support and financial support through institutions and be able to replicate these projects. More specifically, at WRI, what we're looking for are these working groups that will help us structure financial viability. When it comes to water, there are three elements. One, technical feasibility of the solution. It could be through traditional infrastructure or nature-based solutions, natural infrastructure. Then changes to legislation, number two. That's why WRI and other agencies do lobbying to foster this type of action, and also working with Banobras and FIRA and other national banking institutions. And thirdly, financial feasibility or business feasibility, or the business case. We need to bring all of these stakeholders to the table and ensure that we have a sound and replicable project. Thank you.
Thank you, David. We often talk about climate mitigation, but not climate adaptation. And meanwhile, disasters unfold at alarming rates. And this is so needed. If we could have cost-effective, scalable approaches for disaster reduction, preemption. And so I think we all look to WRI and other groups like you to bring solutions that can help subnational development banks really be aware, bring that awareness to municipalities, and create solutions with business cases, with the financial structures that really reduce the cost to local and national governments. Thank you very much. We have two more speakers running ahead. We now have Tanki Andrea Sultana, who is the Senior Thematic Debt Advisor for the Sustainable Finance Hub at UNDP. And of course, we have the same question for you. We need the UN support with all of this. How can you fit into this growing ecosystem of subnational banks and bring resources and support to de-risking, to solutions that can help development impact? Thank you.
Thank you very much, Barbara. And thank you, colleagues. It's a pleasure to join you today. And I really do want to build upon what all the other colleagues have said on the panel already. UNDP traditionally has not developed a bond offering or indeed a debt offering, even a guarantee mechanism that caters to this SDB context. But that said, it's very much a work in progress. I'd like to touch on a few areas that I think can certainly be enhanced, and a lot of the focus will be on partnerships. So UNDP today, we're working on a sovereign and a municipal bond offering primarily around thematic debt and restructurings across 40 countries now, with 4 completed issuances to date. Why not more? Well, I would argue that what is missing from the equation are credit enhancements, are de-risking mechanisms, and certainly the role of guarantees. So UNDP itself has a guarantee policy that I worked on. It's been a few years in the making now. It's run into various hurdles internally, institutionally, globally, to see what works, what doesn't. And I think it's answering to some of the points that have come up already on the panel. So as I mentioned, SDBs have not been traditionally part of the offering, but we would like to look to engage. We've started to work with development banks, particularly around thematic bonds. So for example, in Rwanda and Brazil, and I will touch on both of those examples. But really, I think what we'd like to bring out of this discussion today is how we're looking to partner and add value where it's possible, particularly on bringing SDG alignment through debt frameworks, through uses of proceeds. This is where UNDP really does have authority, where we are the strongest and where we are indeed, in fact, the owner, if I can call it like this, in terms of SDG alignment and delivering on the SDGs. So oftentimes the issuers that we support, they do need credit enhancements to make their instruments attractive to investors, and why we have had 4 issuances again and not 40. So we'd like to work with the panel, with the audience today, and encourage outreach on how to support this ecosystem. So on the one hand, we can look at something like addressing the SDB goals around de-risking, around the alignment of their mandates with public interest in financing specific sectors and projects, especially around the counter-cyclical role during economic shocks. So we can certainly see this in play over the last couple of years. On enhancing areas like creditworthiness, robustness, and sustainability of their clients' financial structures through nature-based solutions. We haven't discussed that today, but it's an area that I think is quite pertinent and also plays very well into de-risking over the long term. In addition, on supporting capacities of local governments on project finance. So we are, in fact, really a technical assistance powerhouse for governments, for bilateral partners, the maintenance and management of these technical skills that need to be very much enhanced, not just in Latin America or the Caribbean, but I think globally in both emerging and developed markets. There's an insufficiency of local projects of scale and preparation, and this is somewhere UNDP can partner with SDBs notably. Finally, I would say that risks related to SDB sources of financing, whether it's related to foreign exchange volatility or limited sovereign guarantees, perhaps risk-averse local capital investors, it can be in part mitigated by strong green or SDG-linked attributes in the eyes of certain investors. So perhaps this has been underplayed because it's more qualitative than quantitative in many ways, but again, a role for UNDP in supporting this. So I would say that UNDP's role is de-risking in a non-traditional sense based on what the other panelists have said, but one where we can certainly ramp this up and support the ecosystem. I have a few recommendations and ideas for financial partners in line with UNDP's work. So I think the sovereign guarantee mechanism can be extended to SDBs. We're looking at guarantee funds, looking at how the Asian Development Bank has worked on the SDG accelerator bond concept. So there are some lessons to be taken from other parts of the world. Credit insurance, Barbara and I had briefly discussed on our preparatory call. So I think this is very helpful in the case of default risk situations. Maybe looking at other traditional guarantee mechanisms where the issuers are the SDBs, but collateral funds can be from existing revenue sources. And then finally, an area very close to UNDP's heart right now is around the debt swap universe. We need creditors in hand, and I think the role of SDBs for supporting these mechanisms is huge and very, very much untapped. So I'm noting time. I will just touch on the 2 examples, but we can bring others to bear. So one is UNDP's engagement right now with the Brazilian Development Association. So this is very relevant to the local context. So it's ABDE, and this is working with local development banks. We have an MOU signed right now, I think with quite a lot of technical assistance and exchange, which will hopefully lead to some of the enabling environments that we're all looking for. And then with the Rwanda Development Bank as well. So here we're supporting a green bond issuance. Our role as UNDP is often around monitoring sustainability, SDG aligned indicators. So very much hand in hand here. We know that the National Development Bank of Rwanda offers rates that are much lower than market, thanks to the support of central banks and the ministries of finance to cover foreign exchange hedging. So there are many points that can be interplayed here, but fundamentally it's delivering the SDGs in a way that makes sense for the countries, but can also be quite attractive to investors. I would be remiss if I don't mention UNDP's work in Argentina with the regional SDB in San Juan. So there's joint programming underway there as well. So I think I just raced through quite a lot of detail, but I'm hoping to get into a greater discussion forthcoming. So thank you, Barbara.
Well, I thank you. And you remind us of the huge wealth of technical expertise that is out there. And I want to put a banner on that. We need to develop solutions about how to structure deals that are cost neutral for local governments and for national governments. And when our friends from AFD presented, it is to note that the ARIES partial credit guarantee, along with the U.S. Development Finance Corporation Development Credit Authority partial credit guarantee, along with Swedish SIDA's partial credit guarantee, these do not require sovereign guarantees. And when we make these special funds, we can set them up, whether it's a pooled finance facility or whether it be like the fund that is being developed now in South Africa with SECO First Loss, so they can be neutral. We need to do that. And one area that we need to exploit more is energy efficiency and distributed energy. And you have your colleagues at UNEP, at the Sustainable Energy for All. There's a lot of very specific technical models that can deliver local public services, water, sanitation, transport, so this is where we need to have expert groups that build these specific financing structures that work. And we can crowd in the private sector. So that's very helpful. And with that, we're going to go to our last speaker, Johan Prats, who is the perfect speaker to address these issues because he is the lead financial specialist in connectivity markets in the finance division for the BID, for IDB. And of course, we look to you guys in terms of everything that you're doing, but how to build it to really make this ecosystem work and bring everyone together and deliver results. Johan, please.
Thank you. Thank you for this kind presentation, Barbara, and that's a lot of pleasure on the IDB side, but we'll try to do our best. Let me add our 2 cents to the conversation. We've been also trying to develop the IDB sovereign guarantee policy during the last 4 years. And we finally have been quite successful in developing the instrument to support the first social bond issuance in Ecuador in 2020. And now we are issuing one more partial credit guarantee to support a Bahamas issuance. We approved a second operation for using the IDB sovereign instrument for a social bond again in Ecuador. And we are running a transaction to support a debt for nature conversion in Barbados through a sovereign guarantee, IDB sovereign guarantee in a partnership with the Nature Conservancy. And it's an area that, as Andrea was saying before me, it's an area that we think it's very promising in the near future because it combines a solution that helps to build the green recovery in the middle of tight fiscal constraints. And it's also an instrument that helps to bring a lot of players together to the same purpose, that are not only MDBs, but also NGOs, and also other players. Yeah, I'm gonna try to do it in English, thank you. But then I think the panel was trying to drill down to subnationals, right? And how subnationals differ and how our toolkit should adapt to tackle the problems that at the subnational level, national development banks are facing. And obviously, subnationals are different among countries because there are different dimensions, different competences, different political organizations, etc. But I think they share 2 basic characteristics. One is that they deal with municipalities. And I think solutions to do that are important. The second part is that they can deal with remote or zones that are remote and are not usually dealt with by other players, because they are, they have a greater touch and feel to their territory. And I think that's another asset or value added that working with subnationals can offer us. And well, being said that, which is our proposal normally when we work with development banks and subnationals, is that we try to help them both. First, in their liability side, so they get financing from us at rates that are very attractive for them to use them and being able to tackle the problems that they are facing. And in that part, we'll help them through risk mitigation instruments, as I said, through guarantees, in helping them to issue in international or local markets at a cheaper rates. And in so doing, we also try to blend financing in the sense that it is not only bringing in IDB, but also very important other key players. And here I mentioned at the beginning other MDBs, NGOs, but there are international funds that we as an IDB have a lot of experience channeling those funds, clean technology, green funds, etc. So we help them to blend finance regarding to that. So there is a work that we do with them on the liability side, and that also has an institutional strengthening part. So most of the time, their treasury departments are not well developed. So some of them are used to only work with the Ministry of Finance, get the money from the Ministry of Finance, and then channel those funds. But I think that we need to improve on is to help them to step up, right? And help them to enhance their capacities to get financing through other players. And at the end of the day, to enhance them to be robust enough and to have the legal framework required in some cases that gives them the financial autonomy that it's needed for them to develop all their potential, let's put it that way. So that's one very important key aspect on the liability side of the bank. On the asset side, we help them with designing products, and some of those products, my colleagues here, they have already mentioned them. Guarantee funds, lines of credits for energy efficiency, SMEs. I mean, we help them fine-tuning all that, because that has a lot of science once you want to design it properly to get to the SME that really requires the money, to get to properly function the guarantee scheme so it avoids incentive problems. So we help them building those instruments. And now we are very interested in helping them as well in being able to finance more infrastructure, right? These banks have been traditionally very linked to SMEs, and now some of them, they need to not major infrastructure, but get into the walls of financial, being able to finance roads, finance PPP projects that municipalities are developing, and that requires new capacities and ways to understand project finance, understand how to price that loans, understand how those contracts works, and so on. And we provide also the technical capacities for them to build those departments that are required to develop those products. Yeah, sorry, I get engaged on this too much. And as I mentioned, Barbara, this would require a further a discussion, probably a whole day, in order to see all the details that these things entail in order for us to intervene.
Well, I think this is a headline, I wouldn't say consulting service, but asset liability management, making sure we're optimizing the leverage of each limited public dollar. This is extraordinarily important. And I wonder, my question for all of you in the Alliance is, shouldn't there be some very directed outputs on specific outcomes like that, which are it's being able to leverage your balance sheet, de-risk, using it's some legislation, it's some treasury, but it's project preparation. I have to say, I find all these inputs absolutely instrumental. The logistical question, unfortunately, we have in front of us, Emily, Jean-Francois, is how much time do we have now? We only have 15 minutes left for peer-to-peer exchange.
Well, thank you. I think you can take maybe 5 minutes for 1 or 2 questions or for comments. And then we will have to close with 2 interventions from Sergio Guzmão and Jean-François Abou.
Okay.
Thank you very much.
Thank you.
And we have to stop at the
12:30. Sorry, but hopefully all these gems around us will inspire us to move forward with more focus and defined outputs. So can I first ask all the panelists from Roundtable 1, Roundtable 2 to turn on your cameras and think if there's any exchanges. For those of you from the Subnational Development Banks, please come online with your pictures. Let's be in the room together. What do you want to ask your partners in the DFIs and your global partners? Is there a follow-up issue you want to put on the table? I mean, let's try to create this exchange. Likewise, is there anything from the DFIs and the global partners, any opportunities you would like to suggest to the subnational banks that are participating? Any hands up? Any inspired comments? I mean, where do we go from here? There's a lot of opportunity. There's a demand. There's supply. How do we create an effective marketplace? I don't see anything, and not everyone has turned on their camera, so I feel like, thank you, Johan. Miguel, what do we have? What do we want to put on the table? I mean, as a filler, we had a question for those of you that do the support to SMEs. What is the all-in cost of providing funding to SMEs under your facilities? Anybody want to give an indicative answer to that question?
I see hand raised. David.
Oh, you do? Well, you do
Yeah.
it. I don't see it, so please.
David, please.
Thank you, Emily. Yes, I think it would be super useful if we can gather in a working table to really discuss what would be the approaches to build the financial structure for some of the projects that we're working in WRI as a leading think tank in Latin America. I think there's a lot of work to be done, and we can tag it into categories, organize a one-day collaborative effort. I'm sure that many people here would be interested in that, but I would be willing to hear other thoughts about it. Thank you.
Great. Agree, disagree, another point? Guys, the house is on fire. We have to have results, please.
I'm happy to make an intervention from UNDP's side. So as I mentioned in the panel, we are very keen to partner with many of you on the panel. So this is more of an outreach where our role is really on SDG alignment as a means of de-risking, and then you as the partner would bring the financial de-risking mechanism. So it's more of a call to action and a call to partnership.
Yeah, and of course we have a dilemma because the UN and the DFIs are ruled by sovereigns. We're talking here about sub-sovereigns that there's a coordination failures on all fronts. So we need the support of the UN on all fronts to make the translation from rhetoric into operational processes and instruments. So thank you for that offer.
Miguel.
Johan, you talked about a workshop, you know, doing asset liability and all this kind of stuff. You know, is that something to create competition? African Development Bank does some stuff like that. Shouldn't IDB do more in Latin America on that?
We do a lot. We do a lot of that with debt management offices.
Would it make sense to do some of that through the alliance?
Yeah.
You know, we're trying to create peer-to-peer momentum. Okay, let's put that on our list. What else?
Sure.
Thank you.
We have a hand raised from Miguel from Cavey. Please go ahead, Miguel.
Muchas gracias, Emily.
Thank you very much. Well, basically, I believe that at the end of the day, obviously, we still have a long way to go, despite all the efforts that have been undertaken up to the present. And in that regard, I think David's proposal is very timely, and I support it. And I think it's important that in addition to the partnerships that we already have, we need to explore some other additional options so that within the realm of our possibilities, we'll be able to expand the options that our countries already have in order to be able to access more financing and address development issues, especially those related to climate change that we're faced with. So in that regard, I agree with the proposal, and we could discuss this further with David to see exactly where we can begin. Thank you.
Thank you. Just Barbara, we have 9 minutes left. I have one request from Alejandro. Is it possible to do it in a few, like in 30 seconds, Alejandro, and then we go to the wrap up?
All right, thank you.
Thank you.
I think this was a wonderful kickoff again to remind us what we have to do in order to develop the region. The strategic alliances must be built all the time between CAF in our case and the subnational development banks. That's almost a natural issue. But also, I think that can be a really good opportunity to make this kickoff, to make these kind of alliances between or among the multilateral institutions and the development agencies too. I mean, it's a good time to set up the table in order to make an agenda to be more effective and to achieve our goals easier. Thank you.
Thank you, great. So we turn it to Jean-Francois, the director, executive director of FMDV, and FMDV is the Secretariat of the Alliance.
Thank you so much, Barbara, and thank you for these wonderful roundtables. It's so inspirational to see so much innovation.
Well, let's thank all our participants.
Yeah, thank you
really
so
wonderful.
Much. And first, we'd like to welcome Sergio Gusmao, CEO of Desenvolve SP, the SDB of Sao Paulo, for the wrap-up session. Before we go to Jean-Francois Abo, just as a reminder, FMDV has been a founding member of the Alliance of SDBs in Latin America. And we also have been advocating for the recognition of SDBs in the UN agenda, providing technical assistance for the Alliance of SDBs in Africa, and facilitating a global coalition in the framework of the FIX. So please, Sergio, the floor is yours.
Thank you. Merci, Emily. I'd like to thank our great partners, todos amigos que se juntaron a nosotros este día. De hecho, un placer muy
all of our partners who joined us today. It really is a pleasure to be involved. It's been 3 years now since we began discussions with the French Agency for Development as well as MDV. And we basically started that at the end of 2019. Then we've had these workshops. And what we realize is the experience and the momentum and very close working on the ground, having listened to the colleagues from Mexico, como Nafin, Banobras, Fidais, the efforts they're undertaking, the imaginative solutions are just marvelous. The same with in Brazil with Combasul, and also those friends working in multilateral organizations. Alejandro has been working with us for quite a long time. The same WRI with David and others from WRI who are distributed throughout the hemisphere. And of course, the IDB, the Inter-American Development Bank, which has provided a great deal of help when we had our first issuance of sustainable bonds at BMG. So that repertoire, that pipeline of programs and instruments that we have distributed throughout Latin America and the Caribbean is very strong. We also had an opportunity over the last 2.5 hours in the workshop to get a clearer idea as to what can be done in terms of scaling operations throughout the region. We already have seen what we have available and the momentum and I believe that that's as strong as the momentum that we've seen in some of the SDBs in Asia. They have very strong SDBs in Vietnam and China. They've also done some other interesting initiatives and programs and scaling. And if we look at the efforts of multilaterals in, I believe in this cascading effect, we will be able to successfully meet the 2030 objectives, as well as programs that address climate change. Very straightforward goal. So we work again closely with the municipal governments in Sao Paulo. Not only do we have loan programs with the municipal governments, we also have technical assistance mechanisms, facilities. We are also involved in managing a guarantee fund for municipal governments and municipal structures for SMEs. That's why the role of these instruments that we've examined throughout today's discussion, looking at what we've done directly in projects, others that address challenges relating to the balance and learning curve and sophistication that needs to be ratcheted up in order to mobilize more resources. And we've looked at some of the key stakeholders involved and heard their perspectives during this workshop. So again, we'd like to thank you all for joining us in this workshop. I'd also like to thank FMDV, and we hope to continue to see this partnership get stronger. And I'd like to thank Jean-Francois Dabou as well. Thank you.
Thanks a lot, Sergio, and thanks also to you for your contribution and your leadership also since the beginning on promoting the role of SDBs within this alliance, but also at a global level within the FIC. So thanks again. I would like also to thank all the speakers and the participants for being there with us. The exchange were very great and very valuable. Thanks also to IDB for the for co-hosting the this event together with the FMDV team, who worked very hardly also to make it happen. Thanks to Barbara for your moderation, and I think it was very great to have you with us, and very valuable also. In terms of the next steps, first of all, the IDB is supporting the preparation of a discussion paper to highlight the main outcomes, but also the inspiring practices that has been shared today during this session. This paper will be presented at the FIX in Abidjan in October, but also at the COP27 in Egypt, in order really to promote your contribution and your what your institutions are doing in that field. So we will invite you also to help us to continue to discuss on that. But because the Alliance is also really turned to action, like Sergio was saying, we are preparing now the annual meeting of the Alliance. The date and the location will be indicated very soon, but because the Alliance is turned to action, we will also organize matchmaking sessions in order to connect the demand side and the supply side, and to develop a strong portfolio of investment and opportunities of partnerships in order to invest into the urban transition through the SDBs and mobilizing the ecosystem. So we will come back to you very soon on that, but it's really the spirit also of the Alliance, exchanging, but also creating opportunities of investment. And FMDV has developed some methodology also to prepare a portfolio of projects and to connect it with the different stakeholders. So I'm very convinced that we will be able to reach very concrete results through the Alliance. For that reason also, we invite all the participants to join the Alliance. And I think the contact of my colleagues, Melissa and Libertad, is on the chat now. So please reach to them in order to join the Alliance. We really want to make it a global alliance with different constituencies of participants in Latin America and the Caribbean. So please reach, and we will come back to you on how to proceed. So I will stop there because we are already late. Thanks again to everyone. Big applause also to the interpreters that were with us and stayed a bit longer with us. Thanks again for that, and have a good weekend to you, and talk to you very soon. Bye-bye.